Hey everyone, this is Hunter Satterfield, a partner here at CWA, as well as the Chief Investment Officer of CWA. Great to see you again. As always, I am joined by Brad Sanders, the Managing Director of Tectonic Advisors, and then also Brian Bortz, one of my fellow partners and the head of our investment committee. This is your January market update. For the month of January, both the S&P 500 and global stocks were both down 5.2%. It was a bumpy month for sure. Domestic bonds were down 2.2%, and then global bonds were down 2.1%. So, Brad, I definitely have to come over to you first. It's a month that I think a lot of people were seeing and reading and hearing things on the news, and they were seeing a lot of red across the board in every sector for the month of January. I know we've talked about this, a lot over the past recordings, but do you want to deep dive real quick technically on kind of what happened in January and what created this volatility?
Sure. I think all it really is the Fed is kind of steering the market, and if you wanted to have an argument against that, I think it's been pretty laid bare that that's what it is. I mean, the moment the Fed mentioned that they were going to start tightening policy in December, the markets got super volatile, and then they doubled down on that with some language in January, and that's where we are. It's just the market pricing in the potential for higher rates and less liquidity, and I think it's the way the market's behaved. It's telling us all that it really enjoyed all that liquidity the last couple of years. And I think that the markets are starting to settle down now. Once these things get priced in, the market will just kind of go on about its way. And then once the Fed speaks again, if they change course or if they double down again, we'll have some more vol. But I think it's that coupled with, people are a little bit nervous at the beginning of the year, and the market's up, 40+% compounded over the last 2 years. And nobody wants to be the first one out of the pool behaviorally. And, everybody's looking for a reason to sell, and the Fed gave them one. And with the market volatility, I think if you look at what happened to some stocks like Netflix, projected to have 8.5 million new subscribers in the fourth quarter, and they came in at 8.3, and it knocks 30% out of their market cap. That's just a group of investors wanting to sell and looking for the opportunity and the reason to do it. I thought we saw a lot of that in January. And it's starting to settle down the last couple trading days, and so hopefully we'll have smoother waters ahead.
Yeah, it's good information, and what we've told clients is that the market had such a good run, and on good runs you're going to have a lot of these types of pullbacks and things like that, and so it's not unexpected. Certainly, we've been talking about that. And Brian, you've been doing this a lot longer than I have, for years with clients and dealing with client behavior and emotion and things like that. I mean, I guess over the past few weeks, as all of this has been happening, what types of questions have you been getting for clients? What types of things are you communicating with them, to kind of help explain, what the best thing for them to do is in a moment like this?
Yeah, thanks, Hunter. Ironically enough, the phones have been pretty quiet. Email's been pretty quiet. And I think we attribute that to the fact that we've been talking about it on these monthly updates regularly, that, we've used the term last year, bumpy ride up, right? And we kind of joke about that now. And I think we're going to see volatility like this. And so we've talked about that and talked about it. And now when it happens, I think our clients are really prepared for the fact that there was a pullback. And when you consider the fact that from the peak in, after the first couple of days of January, where the S&P had fallen almost 10%, and the Russell 2000, which is small companies, had fallen almost 20% from its peak. And then clients get their January statements and look, and they say, "Oh, well, we've done okay through this." We've built this process where we talk about protecting volatility, protecting against downside volatility, not eliminating it clearly, but protecting. And when the clients start to see that, it actually builds confidence in what we're doing and fewer questions. So I've been really, really pleased with the conversations that I have had. I had a conversation this morning with a client, and they were thrilled with how January turned out. So, I think when we talk about the fact that we prepare before something happens, then when it happens, we're prepared. So our clients are also prepared. And I think that's what we've seen in the communication.
Yeah, it's great info. And obviously there's tons more to happen this year. And we're going to be here with you along the way, kind of informing you. We've got Brad and his team over at Tectonic, and then Brian leading the investment committee here at CWA. We will continue to watch things and monitor them accordingly and be back in front of you in just a few little less than 30 days. So thank you so much.